The wholesale price index just came in, and it came in hotter than economists were originally anticipating. In July, economists were predicting a 0.2% increase in wholesale prices. However, that number came in higher at 0.9%. While some media outlets are saying this is a significantly higher number than anticipated, in the grand scheme of things, it is not a major differential. I think a major differential that we'd be looking at would be maybe 1.5 to 2% or more. With that in mind, it's still higher than where the markets were anticipating, right? Wholesale numbers are important to monitor because, as we all know, wholesale products and services that come into retailers are ultimately then distributed to consumers. And when wholesale prices go up on the retailer side, oftentimes the retailer will then raise their prices for the end consumer. So think of something like Costco. Costco is probably the best well-known example in this. Costco tends to sell a lot of their product wholesale, but even still, they also buy those products themselves wholesale. If you've seen those machines where they're pushing the products through the aisle on these huge crates and it's boxes and boxes of food and different products that they carry, right? They're paying a market price on those products, and then they upcharge typically a little bit to the end consumer. So when those prices go up, oftentimes retailers will raise their prices in response to a wholesale price increase. So this is, again, important because right now the market is trying to price in an anticipated Fed rate cut in September. And when numbers like this come in higher than anticipated, it's not a sign that the Fed won't lower rates in September, but it leads us to believe that there's a less likely chance the Fed will actually lower rates during their September meeting. We're going to be talking a lot about interest rates come fall in September because the Fed has not lowered rates since last year, and a lot of investors are very hungry for them to lower rates because rates really have just not been where the Fed wants them to be, and the market is trying to price in a rate cut. It's having a difficult time doing so, again, when news like this comes in. So just something to keep an eye out. Again, is this a big deal at the end of the world? Absolutely not, but it is an important data figure for us to determine whether or not there is a strong chance Fed will reduce rates or a low chance Fed will reduce rates.